Of Bitcoin plummeted yesterday after server issues triggered concern over the stability of the virtual currency. Just the latest wild swing in the Bitcoin craze, the explosive virtual currency. Here to weigh in, Bloomberg News reporter Max Raskin. Max has done extensive research into the Bitcoin market, and we've got our security expert Richard Falkenrath, principal at the Chertoff Group, also back with us. Max, our nerd-in-chief at Bloomberg News, tell us why the wild price swings in Bitcoin after we've seen such a tremendous run up.
So what happened yesterday, and this is as far as anyone knows, but there was an attack on one of the exchanges in Tokyo. There was a cyber attack, and they shut down the servers. So people who had market orders at a certain price weren't able to execute at that price, and they ended up getting filled at much lower prices. And it sort of had a cycle where you would place an order, and an hour later that would get filled.
It sort of raises the bigger question here: is it safe to invest in Bitcoin, to put your money into this virtual currency that doesn't have regulation, that doesn't have a bank, a central bank, doesn't have a government, and doesn't have anything really backing it up?
So obviously it's not as liquid or safe as treasuries or some of the more liquid markets, but I mean it's a very small. The rationale behind it is not that it's incredibly liquid or that it's backed by a government. The rationale is that you have ideology of these people who are really driven by it and really dedicated to it.
Richard, from a security standpoint, or perhaps even from a business standpoint, is there enough transparency into the world of Bitcoins?
No, it's got law enforcement very concerned about this, and they're really
no joke. There's an FBI report literally published on Bitcoin.
They are, and they need to figure out. There's several different problems. One is the use of Bitcoin to purchase illegal or illicit goods, including software hacking tools. Two is money laundering, and whether it's covered by.
Richard, hang on just one second.
To get back to our Bitcoin conversation.
Three main law enforcement risks: one, use it to buy illicit goods; two, money laundering; and three, theft of virtual goods, namely Bitcoin itself, where no law enforcement agency knows what law is being violated when that happens, and no one knows who has jurisdiction.
And Max, this is one of the criticisms for it, that it is being used because you can't really identify people who has this virtual wallet of Bitcoin, that it perpetuates illegal activity.
So it's the same thing like cash. I mean, drug dealers tend to use cash over their credit cards or over anything that requires them to do anti-money laundering applications. But what a lot of people are starting to do is the exchanges to operate on an exchange, you're going to need to give them information, and there are U.S. exchanges opening. So one just recently opened up called TradeHill that's trying to cater to a more professional crowd, and they're only taking the minimum deposit is $10,000, and they run background checks, anti-money laundering clarifications, make sure everything works.
Richard, when self-regulation is responsible for financial activities, we have had an unfortunate experience with that in the past 5 years. To what degree do the potential regulators here, whoever they may be, worry about that?
Well, the Treasury's looked into this.
Well, they're struggling with it. And they haven't published comprehensive policies yet. No, as Max reports, no jurisdiction really has a comprehensive policy. And Treasury seems to say, look, if you're in the business of taking a virtual currency and trading it for fiat currency or real goods, you are regulated. But if you only do it at the virtual level, you are not regulated. And it's not sure that's going to work. In part, Max reports mentioned this thing about the ideology. Bitcoin did not start as an economic initiative. It started as an ideological initiative, which was trying to change the way the international economy works.
But now, Max, there is an economic perspective to this. I mean, whether it's legitimate or not, there's an argument.
Well, so, you know, there are lots of gold bugs who think that gold is good, and you end up having to trade it because there were people who had thought of it as a store of value, and now it becomes the way that you hedge against inflation. So the more people who think Bitcoin hedges against inflation, the more it becomes a hedge against inflation.
And you also have a great piece out today on, you can see it on Bloomberg.com, on millionaires, people who've made tons of money on Bitcoin.
Yeah, so a bunch of the early adopters who were in part driven by their ideology, by Austrian economics, by their belief in and skepticism of central banks, they're rich because of this. They bought in at 20 cents when Bitcoin was trading for 20 cents. They mined, and now they're all millionaires.
And I bet they're not backing out.
No, a lot of them are just, you know, totally dope. I asked one guy if he's cashing out. He said, yeah, he cashed out of the dollar. So he's into Bitcoin.
He's into Bitcoin. All right. Well, the craze continues. Max Raskin, thanks very much for bringing us the latest. And, of course, Richard Falkenrath, principal at the Chertoff Group, for bringing us some of the security implications.